I know one of the things you want to point out, Chris, is that it's not necessarily that the businesses are bad, but that the stocks that have gone down have been unwinding maybe unrealistic values.
I think that's right, Tyler. And I think this is actually quite healthy. And I think what's happening is that you're getting, in a speculative market with lots of stimulus, you get companies that have great forward-looking business models but haven't yet delivered, and they get bid up, and the old guys get left behind. And that air is coming out of that kind of speculative bubble, and I think it's a healthy thing.
So let's look at the payment stock. Visa, MasterCard, American Express, all higher. Is that a continuing trend, and is it going to continue? Or has most of the washing out been washed out for the likes of PayPal and Block, formerly known as Square?
No, I think we have more to go. And the reason is, I like to say now that we're in a Jerry Maguire market. It's show me the money. And last night, PayPal couldn't do that. And last week, when Visa and MasterCard both reported, they did. They really showed up with bags of money. Omicron is slowing them a little, but they're still kind of the juggernaut. And I remember when MasterCard and Visa were the new guys on the block, and they got bid up, and they've settled back down. But now they're just real powerhouses. And I think this run has further to go, because even though PayPal is down, the forward multiple is not still super attractive, still quite a bit more expensive than Visa and MasterCard.
So you think it could still have some downside, Chris? It's interesting because there's a lot of retail interest in the stock. All of a sudden, it's one of the most discussed, most active stocks on Fidelity right now. Institutions might be getting fed up, but what would you say to those people who think they're coming in here on a stock that's gone from 310 to 130 and getting a deal?
I'd say be careful. At 310, it was awfully expensive, and so. Let's look forward, and I'd also ask them to read the transcript of last night's earnings call. That the management at PayPal didn't really have all their ducks in a row. I mean, there was some miscommunications with the street over the last quarter. There was some scramble to correct those, and I think what we're seeing is a company that doesn't quite have its act together yet, and I'm not really sure where the bottom is. So I would really wait till things settle out.
Let's look at a couple of the retail stocks. You look at the likes of Kohl's, Bed Bath & Beyond, and Gap, all of them up over the past 3 months. Stitch Fix, the trendy ones, ThredUp, Rent the Runway down. What do you think here? How do you take those apart?
Again, Tyler, I think we're seeing some multiple compression. The sexy ones have good business models, but they just hadn't delivered yet, and they still could. But what I'm seeing in retail that's different than payments is the retail stocks that have been winners that you're pointing out, they were so beaten down that isn't it a great way to make money when something just has to revert to the mean and you can make a terrific return? And I think that's what we're seeing in retail. I would warn investors, though, that this may be in about the 8th inning. Bricks and mortar, they deserve to have a place, but I wouldn't say they're up and coming and they're going to displace these new business models. I just think that they probably earned back what they had lost already.